All right, welcome everyone. Thank you again. If you are just joining us today, we are here to discuss the basics of down payment assistance programs. We'll be discussing what they have in common, how they're different, and what you need to know to start conversations about down payment assistance without necessarily being a program expert. My name's Will Medina, part of our DPR team, and with us today we also have Keith Futrell, our DPA program specialist, Tracy McIntosh, our customer service manager, Lori Johnson, customer success specialist, excuse me, and Veronica Chapa, our sales engineer, an A team, if there ever was one, truly. They will be answering questions in the background, so please feel free to use the Zoom Q&A feature to engage with them as we go. We know that there will be questions, so go ahead and put them in there. But we will also be looking at the chat as well. And before we get started, please note that today's recording of the webinar will be shared with everyone attending today. So first, a little about who we are. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs. So DPR stepped in and developed an easier way to connect eligible borrowers with hard to find resources like DPAs, grants, mortgage credit certificates, which we'll refer to as MCCs, and other forms of assistance. We also provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. And just as a fun fact, we are celebrating 16 years this year. We are extremely thankful for all of the support, and we're looking forward to continuing our mission and our vision. Ultimately, we are here to help you connect home buyers to the down payment help they need. So today, we'll be discussing the basics of loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise. Now, let's take a look at the current state of these assistance programs. Of all the homebuyer programs out there, 73% are some form of down payment or closing cost assistance. Now, as we look at that, that's really a catch-all category. And we'll be digging deeper in a few minutes, but it's important to know that not all DPAs are the same. There are differences. 82% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 53% are forgivable, either in part or in full, essentially becoming a grant over time. And 51% are both deferred and forgivable. And then there are still other DPAs that are true grants at closing or repayable monthly after closing. And as mentioned, we'll be breaking these down further, as well as the affordable first mortgages and tax credits or mortgage credit certificates in a moment. So where are these programs located? Well, these programs are literally everywhere. Some markets have more homebuyer programs than others, but there is a state housing finance agency in every state, and their programs are available statewide. So as mentioned, there's literally no county or market in the country where there isn't at least some kind of down payment assistance or other form of homebuyer assistance. So who funds and administers these programs? As mentioned, every state has at least one housing finance agency. City and county governments often have community or economic development departments or housing authorities. A number of nonprofits like NeighborWorks and Neighborhood Housing Services and others operate in markets across the country with themselves having varying programs. Many employers like municipal governments, hospitals, and universities also offer their employees down payment assistance. And there are also community action agencies, land trusts, and so many other organizations out there that are all trying to open new doors to homeownership and promote housing growth and responsibility in their market, which is your market. And they've all got funded and available down payment assistance programs. So as we always like to do, we like to take a look at current trends. The demand remains through the roof. Providers are increasing assistance amounts, income limits, and purchase price limits to help more buyers in today's market. There are new state and local programs that continue to launch nationwide, and 82% of all DPAs are funded and available. So we mean it when we say that down payment assistance is still available and not going away. In fact, our recent Q2 2024 Homeownership Program Index report showed an 11% year-over-year increase in available programs, which then raises the total number of programs offered to over 2,400 programs. And we're still seeing that more programs are coming to market all over the country, continuing to offer you more opportunities to help new buyers. In that same report, we also reported on growth in homebuyer assistance programs that expanded inventory options for homebuyers, which includes support for manufactured housing and 2 to 4 unit properties, of course, so long as they are owner occupied. Just since last quarter, there has been a 3% increase in programs that allow for manufactured housing and a 2% increase in programs that allow for multifamily properties. We also reported on programs for first-generation home buyers. Okay? 21 programs currently targeting first-generation home buyers, a 133% increase from Q1. Fantastic. So all of these programs share some basic universal requirements. As an example, they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties, as long as they will occupy one of the units. They all still require some minimal investment from the buyer to keep a little skin in the game. This investment can take the form of a monetary investment, which can range from $500 to $1,000 or perhaps more. And it's important to recognize that the buyers are also investing time, for example, by completing their homebuyer education requirement, which homebuyers typically complete a homebuyer education course to qualify for a down payment assistance program. And of course, these are not cash buyers. We're talking about buyers financing their home with a mortgage, so they have to qualify for a mortgage as well. Now, with those universal requirements in mind, let's take a look at the 3 most common types of homebuyer programs and what's unique about each of them. So the 3 most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificate. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. And remember, as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So first, let's review down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who themselves offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand up to tens of thousands of dollars to eligible buyers for down payment help. So I would like to direct you all to the right of the screen, and I'd actually like to start by describing the grant programs at the top. So grants, we can say, are gifts that do not have to be repaid. Repayable seconds, funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. Deferred or silent seconds, where repayment of the original amount is postponed until one of several events occurs, commonly when the borrowers sell, refinance, or there's a change in occupancy. And forgivable seconds, where some or all of the original down payment assistance is forgiven. Often, a percentage of the loan is forgiven each year for a predefined number of years. As an example, it's common for a forgivable DPA to be forgiven, let's say, 20% per year over 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses, rehab or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions, the most common uses. All of these uses help the buyer shed the costs of purchasing and financing a home. We are even seeing more programs allow their funds to be used for temporary or permanent interest rate buy downs. Now, one of the most common misconceptions about down payment programs is that buyers must be first-time home buyers. In fact, there are over 2,400 programs across the country maintained in down payment resource, and 40% of them have no first-time home buyer requirement. And beyond that, most programs adhere to HUD's definition of a first-time home buyer, which effectively states that you're a first-time home buyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in targeted areas and make exceptions for veterans or certain professions, or just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash up front and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Others may bear interest, but defer the payments for the life of the loan until, say, the sale of the property, or even better, until the affordability period expires. So as an example, many programs stipulate that the buyer occupy the property for a certain number of years. Let's say that could range between 3, 10, perhaps more, and the lien is forgiven, essentially becoming a grant. For those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs. So what are the eligibility requirements? Well, we found that most have the following limits. Eligibility depends on the program and the funding sources. Very key. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, or AMI, the average income of their market. But basically, they all have income limits ranging from 80% all the way up to 140% AMI, and sometimes even higher, which can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. Now, the location of the property is also critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide covering your entire market. And we even have some nationally available programs integrated into down payment resource. Now, some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, requiring a FICO score of 620 or higher. Homeownership history also makes a big difference. Many programs are only for first-time home buyers, but there are many for repeat buyers or even current owners as well. And remember, a first-time home buyer is simply someone who hasn't owned a home in the last 3 years. Now, I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. So as an example, think about someone obtaining FHA financing. They're having to put 3.5% down. If a down payment assistance program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. So when you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, even qualify for a little extra home to suit their family needs. We like to say that increased purchase power offers a competitive advantage. And of course, reducing monthly payments also allows for a little extra cash every month to be put back into savings, which, as we know, has been shown to improve default rates. Many down payment assistance programs require the buyer complete a home buyer education course, which provides valuable information about the home buying process and the resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. More and more, down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. So this allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. Most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now we'll take a look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher LTV. And you can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. Now let's take a look at the third of the most common homebuyer programs, the Mortgage Credit Certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. Now, not every state offers an MCC, but if there is one in your market, we implore you to take a look. They are a great benefit for homebuyers. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of the mortgage interest costs, and you still get to deduct the rest of the mortgage interest you paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. Let's take a look at an example of how mortgage credit certificates work. Let's take a $200,000 home. The buyer closes and makes 12 payments in the year. They paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit. So $2,000 in this example. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. And here we have a recent case study in collaboration with Loan Depot. It details the success originator Mosey Gatling had engaging partners to explore affordable mortgage solutions for home buyers. The visual is regarding layering two Nevada Rural Housing Authority's programs, Down Payment Assistance Program and MCC, of course, if and when conditions permit. The example depicts the potential savings when exploring affordable mortgage solutions for your home buyers. So let's wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or even unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement, the assistance amount is increased, and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, or census tracts, or maybe sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. As an example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can get an additional $2,500 for a total of $12,500 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses. Or the term protectors could include police officers, sheriff's deputies, corrections and probation officers, and more. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans, and some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. Some of these programs offer the same or similar incentives to active military and Guard or Reserves members. So I know we've given you a lot of information today, but we want you to know how to access all of these DPA programs once we leave the webinar. So I'll be showing you a number of ways you can access DPA info and start to enhance your marketing. Anyone can go to downpaymentresource.com and run an eligibility search for free anywhere in the country to see what's available for you or your clients. If you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available homebuyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. So please check out DPR, let your clients know what's available, and talk to your lending partners about which programs they may offer. And please let us know if you have any questions along the way. These are just a few of our partners that we're listing here, and we are continuing to onboard MLSs, and several more will be launching DPR in the coming weeks. Now, if you're a member of one of the partner MLSs. When you are logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. So click it, and we will tell you or your client which programs are available for properties that they like the most. Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you too can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. And loan officers, we have a version for you as well, which allows you to control which programs consumers see so you are aligned with the product offerings at your company. So what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. You can use your Down Payment Connect link on your website, in your email marketing, and across all social media. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And no one else gets your leads, just you. So we encourage you to get creative and reach more buyers and educate them on these amazing opportunities. We'd also love for you to join our growing Facebook group, Down Payment Insiders. There, you can join over 12,000 real estate agents, loan officers, housing counselors, and even DPA providers as they discuss best practices with home buyer assistance programs, first-time home buyers, working with lenders, learning from each other, etc. You can listen in and learn or participate in the dialogue and engage with your peers. It's also a great place to network and connect with loan officers that actually offer DPAs in your market. So I'll leave you with a case study that illustrates how important down payment assistance info is for realtors and home buyers. Amber here was a new agent in Florida. No one was helping her peers understand down payment assistance requirements, as many of them began themselves to explore homeownership. So Amber stepped in and learned all about DPAs and built her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. So tell their story, help them, and they will refer their family members and their friends. In closing, feel free to reach out to us with any questions. We're here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. And we will be actually taking a few questions now, so we're going to stay on for some time. We are thankful for the opportunity to be here discussing down payment assistance programs with everyone. So thank you again, and I will refer to the A team. Any questions that have been popping up that we should answer live?
Hey, Will, this is Tracy. We have had some great questions and lots of interaction in the background while you've been speaking. The first thing that I do want to note, as always, we get lots of questions about whether or not this is being recorded and if it can be shared. It is being recorded, and everyone that registered for today's webinar will be emailed a copy of this, including the slide deck. Just give us a little time with this many people on. It takes a while to process, so it's probably going to be likely by end of day tomorrow that you'll receive that recording. And there were two out of all the questions we got, there are two that are standout ones that I got a little bit on repeat that I wanted to touch on. One is finding lenders that work with down payment assistance. Like, how can you find good lenders that work with down payment assistance? And this is a question we get all the time. So if you don't mind, well, I'm going to go ahead and just go ahead and answer that one.
Yeah.
But there are a few locations that you can do this. So first of all, if you join us on the sorry, not the contact us page, but the Facebook page, we have Down Payment Insiders. which Lori in the background, if you don't mind, can you drop that in the chat box? So our down payment insiders on Facebook, if you join that, it is a great page to do some networking. We see it every day, all day, where people are trying to find others to partner up with and help team up to help these home buyers, right? So that's a great place. Definitely reach out to any existing loan officers that you work with and start with them. Ask them if they work with down payment assistance programs already. They may already be working with them and you're just not aware of it, right? So start that interaction with the ones you already have relationships with. And then from there, you can always merge and find additionals to add to your roster of contacts for those specific buyers who are needing down payment assistance. The other step that you can do is when you receive a lead from somebody filling out the down payment assistance eligibility search, or if you do your own search on our website and you see the list of all the different down payment assistance programs that are available, there is a button you can click on, a link that you can go to. And within that link, that next page is going to be a list of approved lenders. This is not our approved lender list. This is from that particular program provider. So those are people who have already been vetted and companies that already are allowed to work with that specific down payment assistance program. So that's a great place to locate specific lenders that you know are already familiar with that down payment assistance program, already work with them, are already um, probably very talented and savvy with being able to work with these programs. So that's a great way to do that. The next question is what to do with a lead. If you should receive a lead from Down Payment Connect as an agent, what's your best next step? And what I always tell people is you don't have to be an expert in down payment assistance as an agent. That's not your role. You can certainly learn as much as you want and you can become an expert. But the biggest thing is making sure that home buyers know that these down payment assistance programs are out there and connecting them with a lender that can assist them from there. The loan officer will guide them through the steps for the application process. They will collect all the additional information they need from them, and they will have to be part of that with guiding them for what's the best program for them with additional information they collect. So send it off to them, whether they already have a lender they're working with, or you're referring them to one that you work with that you know is savvy with these down payment assistance programs. Send them that email that you receive with all of that information and then let them do that and just make sure to reach out to those contacts so that they, have some of your interaction and know that you're on it. That's all that I had. I see there's a lot still going on in chat and Q&A, so I don't know if anybody else has something they were wanting to note real quick while I look at these.
Tracy, if I may, while you're still on, there's a question here regarding home listings in the matrix. I know it wasn't really covered in this webinar, but outside of reaching out to us, there is how would they go about learning a little bit more about how to navigate their matrix if they're one of our MLS partners?
Okay, so if you are a member of one of our MLS partners, each MLS is a little different on where they put the information for you to click on and all that. But all of the MLSs have the integrated within the actual listings, you will see a flag of some nature that says down payment assistance is available. It's either, it looks like our little house logo that you can see on the bottom left of the screen right now where a down payment resource is. So it's like a green and white or green and blue logo, or there's a money sign, a green money sign and a check mark. So there's things like that within the actual listing so that you can see that that specific property is eligible for down payment assistance. Now, the buyer also has to be eligible for down payment assistance. Both need to match up, but that gives you that portion from right there. But you can look for down payment resource. Usually it's under external links or I'm not sure, but usually under external links within your MLS, you'll see down payment resource. If you click on that, that's going to take you to your personalized Down Payment Connect page, right? Where you'll find your individualized link that's, if you're a member, it's already created and waiting for you. You don't have to do anything but click on it and find it, copy it, start putting it out there in social media and your email signature, wherever you'd like to do it. But those are the best places to find that information. You can also, a lot of times, our MLS partners will do recordings of our training sessions and have those available for you somewhere internally for some tools and things like that that you can locate. So you can reach out to your contact at the MLS if you're wanting to know where any of that information is. And we do webinars, training webinars for each MLS every year or so, sometimes a couple of times a year. So definitely join us on those.
Thank you,
Any other
Tracy.
questions? I did see a question about the down payment insiders earlier. I don't know if it's already been answered, but asking which down payment insiders to join. There should only be one. There were two at one point, and we've merged those together because we don't know what happened there, but it should be a very large number of people that are joined in on that one. So if you see more than one, just click on the large one. Sorry, go ahead, Will.
Brad, is there something you would like to say?
No, I was just gonna kind of follow up with Tracy there.
Sure.
That yeah, it's the larger one with over 12,000 members in there. That's the one that is getting activity, and we're trying to build it up even more.
Thank you. Actually, somebody put in it's the one with 13,000 members. We appreciate that. We will make sure to make that correction here on this slide. So as Brad said, the more we can get in there, the better. Any other, if there are any specific, I would say Down Payment Connect, MLS partner questions, Tracy, would it be best to just reach out to the info at inbox? Or is there a specific place where, because I see a lot of those questions about leads and so on. Obviously, we didn't cover much of that, but we certainly want to answer those questions. So where should those be submitted?
Okay, so I would suggest reach out to your MLS first and foremost because they have a lot of information there that they can give to you. Like I said, recordings, or they might have documents they can give you and things like that to help guide you. But from there, definitely reach out to us at info@downpaymentresource.com. And someone on our team will be happy to get back with you on any specific questions. I do also suggest we have rotating webinars. So this one that Will just did is a great webinar, but also if you're looking for some specifics on Down Payment Connect and utilizing that, like ideas on how to put that out there on social media and things like that, we do have another webinar. We have a recording on our website that you can locate um, under the education tab on downpaymentresource.com. If you scroll down on there where you signed up for this webinar, likely there's another one called Grow Your First Time Homebuyer Business. It's not happening until October, but that one specifically talks about Down Payment Connect a little bit more deeply and going over some ideas on how to market and utilize that. But if you keep scrolling down, you can see a recorded webinar for Grow Your First Time Homebuyer Business that you can watch for now, until you join us on that live one as well. So hopefully that helps you guys.
Thank you, Tracy. I see that there were two questions at the top regarding off market deals, and I guess just hopefully if I can answer this correctly. If it's not listed, it's still something where if you've got the property address, that this is if you're not a partner member or a Down Payment Connect user, right? Just running our search eligibility on our website, you could take that property address, plug it into that search eligibility tool, and based off of that, we will provide you a list of information, right? These programs that may or may not qualify, and so that could actually be of use for your borrower. If there's anything else the team would like to add as well, please jump in. Let's see. Many clients. Only option available to them. So I have, this is a great question. I've had many clients that have DPAs that are second loans at closing. How do I know if this was my client's only option available to them? Are they lender specific, whether they are grants or That is a great question. Part of our search eligibility tool is to provide you, really all those um, uh, potential programs that the applicant may qualify for, so that, kind of going through that list, looking at those requirements, reaching out to the program providers will certainly yield some answers for you as to what exactly the client may or may not qualify for, since obviously no two are the same, but they may potentially qualify for more than one. Miss Forrest. Is there anything else, team, that we feel we would like to answer?
I have one more, Will. Tracy again.
Sure.
I'm just taking over. Sorry.
No. Love it. Thank
Um,
you.
I'm noticing, so we had a question earlier and I see it's kind of come up again in a couple of different other comments here, asking about if down payment assistance can be used to pay commission. We know that that is a big topic right now with all of the changes that are going on. So I want to go ahead and just let everybody know, because there's a few of these questions out there in chat about it. As of right now, you cannot. We are keeping an eye on this because we know that as decisions are being made and all the program providers are in their think tank of deciding these different terms and abilities and things like that, that it may be something that can be used later. But as of right now, it is not an option. Will, unless you've heard something new, is that correct?
Yes, yeah, that's obviously something that we are continuing to track as we see it, pop up. But at the moment, nothing where we could say that providers are issuing any instructions that would be an eligible use of funds at the moment. If a buyer is looking to buy new construction and needs assistance, can they get DPA and also use the builder lender to get additional incentives? Some programs, great question. Some programs do allow for the purchase of new construction. As to how it can be layered with any incentives, the program providers are very specific with respect to their requirements. So it would note there what they could or could not be layered with, if they can be layered. But certainly every provider is different. So that may or may not be an option. Great question. Let's see. So I know it's been a great group, a very active group, and we certainly appreciate it. We can't thank you enough for being here with us today, and we hope to see you again in future webinars. I will put our inbox up, so if there are any additional questions, info@downpaymentresource.com, and of course our website, tons of great information. Feel free to go check it out, run a search, see what's in your area if this is your first time with us. But again, thank you all. Thank you to our team for being here today as well, and we hope to see you at the next webinar.